Hello and welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is Krithivasan, who is the MD and CEO of TCS. Krithi, thank you very much for joining us on NDTV Profit. My first question to you yesterday, you've been very cautious in the way you projected the outlook for the coming quarters. You said, it was a stable quarter, but as far as demand outlook is concerned, you were very circumspect. I just wanted to dwell a little bit more on that. How do you see the demand going forward, and what are the factors that you're looking into to get an idea of revival?
Sure. Sajeet, first of all, a very happy new year to you and all your viewers. When you use the word like we are cautious, I would probably say we are cautiously optimistic. I think the way we see is that the demand, if you look at the order book for the last 4 quarters, has been very strong. The previous 3 quarters, we clocked almost 10 billion order book. In Q3, it was 8+ billion. So it's a very strong order book. And what was not helping is, as we talked about in the past, some of the older programs not getting paused or getting reprioritized. So that is causing a dip in or a depletion in our overall revenue. So as much as the new programs start, like whatever we started in the last 1 year, we are continuing to grow all of them, and they are tracking as per schedule. So to that extent, what would further drive growth would be a better overall economic macro sentiment, which would give the conviction to the people that they can invest more, or they don't have to stop the ongoing projects, because they will continue to yield the results. It's not the demand itself, the new demand itself is not an issue. As I said, we've been signing a lot of new deals. The issue is around reprioritizations around the old programs. So, but once there is a conviction that those programs will yield results, or the results that they are producing are sufficient for them, there will be less number of pausing of those programs. So that's the way I look at it. So overall demand itself, I won't call as an issue.
So give me a sense of, from a macroeconomic point of view, what are the triggers or points that which leads to your inferences, basically? What is that threshold or event that will say that, okay, now things are of the past and demand will come up?
I am not an economist to give you that, and you also seen most economists have been predicting a slowdown, which is also not happening. The issue to now is that the economist believes there could be a slowdown, and so everyone is preparing for that. Maybe a trigger would be a strong messaging from the economist or from the federal bank saying that the economy is going to not get into recession or a slowdown, and or if at all, it may be only a soft landing. Okay, so once that certainty is given, the sentiments will improve. Like we look at the sentiments, if the sentiments improve, our clients are more convinced about spending money there, because we've been calling out a lot, like there is enough technology debt also. Like people have to spend on technology. They have to upgrade their technology. They have to leverage the cloud migration. They need to leverage generative AI. There is so much in the offing. So we believe that it has to happen, but there should be more confidence on the outlook of the economy.
4 quarters back, we were worried about that there may be a recession. Today, the outlook has changed from a recession to a soft landing. And is that you're seeing in the client orders as well, that there's an outlook change from recession to soft landing, and so it's a positive way to look at demand coming, maybe not in the immediate quarter, maybe 2 quarters down the line?
We are optimistic. That's why we are optimistic about FY25. And demand, as I said itself, demand is not the issue. Like the extreme focus on cost and reprioritizing the old programs has been an issue. I think that will also ease up as our clients realize that, like you said, it could be only a soft landing, or there may not be, or it could even be better than that. Once the realization comes in, then the reprioritization of those old programs will also reduce, which will net give us better growth going forward. And that's our going in planning position for FY25.
Give me a sense, because you've been calling out the issue of orders that came between FY20 to 22, because reprioritization happening, there has been stalling of some of the projects. What is that quantum which is making you so nervous about demand? You said the new demand is not an issue. The old one is something which is a legacy one which is coming into play.
Yeah, it is like this. Like it's not a program gets stalled or stopped immediately. So many of those programs are thought of as multi-year programs with stage 1, stage 2, stage 3. You expect different benefits to happen. Now after stage 1 or stage 2, if they realize that the benefit, incremental benefit that they are likely to get is not sufficient enough in the given economic environment, they say let's stop at stage 2, let's not do stage 3. So what the overall environment is better, and there in their perception the incremental benefit is going to outweigh the investment, that stoppage or the pass after a given stage will not happen. So that's why we are looking at it. Like I won't be able to give you a quantum saying that 3% of the program stopped or 5% of the program stopped, but it's enough for you also to look at, like, we've been winning enough deals, but if it is not visible in the growth, like you can see that the kind of programs getting stalled or similar to what we are starting, but also look at from a quantum perspective. If we had produced a 3% Q-on-Q growth, you would have been very happy.
Yes.
So and we produce a 1% growth. So the difference is between 1 and 2%. So we are talking about programs of that. It's not there's a wholesale stoppage of programs.
So you're saying that the normalized growth rate which you've been doing, and now that is the difference is the is coming from
exactly.
the reprioritization.
Absolutely.
Which is
Correct.
coming in.
Correct. Yeah, correct.
How do you look at various verticals? BFSI being the biggest one, you've been getting orders in that. US, another geography where 50% of your TCVs are coming from there. How do you see BFSI going forward?
So if you actually Q2 on a sequential basis, we called it, actually BFSI had a small growth. It was not now degrowing in Q2. Q3 you have for normal seasonal furlough impact, and we also mentioned that couple of large programs that we are doing came to an end. So that could not. So that also caused a dip in revenue. So without these headwinds, maybe BFSI also, I don't know, a great quarter, but I have a decent positive growth. So we believe going forward with these factors not in place, okay, going forward Q4 onwards, it should start showing. Yes, not a, I don't know, at least on a positive trajectory. Like if not a great breakout quarter, should be on a positive trajectory.
Are you saying that it's bottoming out of BFSI from an order or a
nearly? Like I don't know whether it will be Q3 is a bottoming out, Q4 is a bottoming out. I don't know what because it's near there.
And from there,
barring no new headwinds.
I would say the Fed being the one of them, which is.
I said, like, I'm not the economist. Yes, Fed could be one of them or anybody else.
Krithi, 3 years we are down almost 3 quarters of this financial year. Is it fair to say that you may exit FY24 with a 3 to 4% dollar revenue growth on a CC basis?
Sajeet, you can do the math. Like we have done 3 quarters. It's we are now. So you
is it a fair assumption?
It should be a fair assumption. Yeah, it should be a fair assumption. Like I not looked at the exact numbers, but it should be a fair assumption.
And FY25, you're optimistic about it, given the fact that you're saying that the new orders are working and it's yielding revenues and everything, which is going forward.
That's right. That's right. We are quite optimistic, or reasonably optimistic.
Geographical uncertainties. Have you been able to manage that well?
Yeah.
UK has been good for you, but Europe has been weak. US has been stable, but there is the soft landing issue which is coming in. How are you managing these kind of?
Like if you, that's in fact we called out yesterday. Even if you look at the performance of this quarter, our geographical diversification has yielding result for us. All the major markets, because of the seasonality, we had a weak revenue growth, but it was very nicely covered by all the new growth markets. So that there could be some disparity among the markets at all time, Currently, our business is doing very well. We believe Europe is turning around, looking at the pipeline, looking at the order book, looking at the revenue growth. So once North America also moves into growth mode, we should be looking good.
And that should augur well for your margins as well. 25% you've been able to get on Q3. Aspiration is 26 to 28%. But analysts believe that there are little levers left now, unless growth comes and gives you a tailwind to push up the margins. Is that a fair assumption?
See, we 26 to 28, like you said, continues to be our guiding beacon. Okay, we would make every effort to go towards that, and we believe there are enough opportunities left in the system to further improve, bring in efficiencies. You can bring in margin improvement through more offshoring. You can bring it through more productivity. You can bring it through better pricing. So number of opportunities do exist, and we are almost at 25. We are talking about another 200 to 300 bips to be on the upper end of the gate. So we are quite confident. Like, we don't think that there is no headroom to improve.
And the tailwind would be internal efficiencies and productivity, or it could be the growth as a combination of
growth definitely, but then pricing also is an opportunity. So from an external perspective, growth and pricing. From an internal perspective, you can look at productivity and other levers like better utilization of the people that we have. So
has pricing improved, or
pricing has been stable. Pricing has been stable, but our overall realization, but driven more through productivity measures, has improved.
When you talk of productivity, I wanted to talk to you about the employee count, which is there, because you've been able to bring up the productivity there. But if I look at your net employee count, it's almost at 2-year low. 2022, if I'm not to Q4 2022, that was around 5.9, and Q1 it was 6.05, and now we are at 6.03 on a net basis. I'm just trying to figure out how are you managing this employee count, because at one point in time the street used to use this as a metric to gauge your growth. Now it's not available to them, so how do you do it internally as well to gauge your growth?
I don't know whether it's a 2-year low, but I leave it at that. Like, it could be a 2-year low or a 4-5 quarter low. But we've been calling this out, Sajeet, for quite some time. Like, during the demand, when the demand was very high, we proactively went to the market. We realized that we cannot be hiring just in time, and that's not our model. Also, we always like going to a campus or do some proactive hiring, train the associates, and deploy them in the projects. That's what we've been doing. So we hired ahead of the need or the requirement. Now that we are able to, as whatever the new demand comes in, or if there's always we said there's about 13% attrition. So we've been able to replace those exits with the folks inside, and that's the reason that you don't. But it's not that we stopped hiring. We are hiring, but not replacing everyone. That leaves because there is a sufficient internal bench.
Is there growth visibility enough to go ahead of the kind of attrition that we have, or is it going to be more of productivity led hiring that's going to come in from here on? Because at some point in time in the last 2-3 years there was a supply issue, pricing, wage inflation, everything was hitting Indian IT companies. Has all that changed?
Sajeet, like, if you looked at the last few years also, our approach has been very consistent. We always been going to campus, or we take trainees. This year also we announced that we are, in fact, will be the first one or maybe the only one to go to the campus, do the campus hiring. And because once the campus hires come, it's usually a 6 to 9 months time period before which they can be deployed into the projects. In the meantime, if there is any demand surge, we can look into the lateral recruits also. So, but our approach is fairly stable, and we will take a lot of freshers from, when I say a lot of freshers, decent size number of freshers every year, and train them, and that model will not change.
Is that be similar to what FY24 that you announced 40,000 odd?
See, like what Milind mentioned yesterday also, We will start off with a smaller number, but we expect to ramp it up towards the end of the year,
And
based on the demand situation.
And what is the comfortable bench that you're looking at as of today?
See, we are operating at about, I don't know the exact number, 86-87% utilization. So we will be happy even if it goes up by another 200-300 basis points. So I think in our peak, we've been close to 90% utilization. So that's a number we'll be comfortable.
And that could be a driver for your margins
as well, absolutely.
Which will be there. So it's a good news for some of the college as the thing that
it's good news for us also because it brings in fresh energy, fresh thinking, and whenever we go to the colleges, there is so much of excitement about the fact that TCS will be visiting them. So we are also happy about that.
Mm-hmm. Give me a sense of how laterals are working out for you. That demand and supply situations within the market. You've been seeing a lot of churn happening at that mid level.
It's much better. Like one way to look at it is how easy, what is the lead time for you it takes for you to fill the positions in the lateral market. That has continuously considerably reduced our ability to identify. So always a few niche skills you will find difficulty, but non-niche skills it's a much better situation now. We don't as it is, we also try to reduce the dependence on laterals. We try to use as many people internally as possible, but for the few we venture out, it's been much better than what it used to be.
In the last 3 quarters, you had a TCV of close to $30 billion, 29.5.
Yeah.
Your LTM book to bill has been around 1.37. Is that a comfortable level for you? How do you look at it?
The TCV itself has been quite good. Okay, as like you said, excepting this quarter, the previous 3 quarters we had about 10 billion plus every quarter. This I would say maybe a seasonality, and also some TCV always will have lumpiness. Like we will not be able to predict whether it gets signed on 31st or it can get, even if it slips by a week, it will go into the next quarter. So some lumpiness will be there. So we are comfortable with the order book. The book to bill also is good. Like you see the moment if you are able to increase it from 1.1 to 1.2 or 1.3, that will also show up in a growth in a big way. But we are quite comfortable with the order book and the 10-year order book also.
You've been calling out saying that decision making has been delayed for large deals.
Yes, sir.
Has it improved a bit?
I won't say it has been a considerable improvement, because the large deals, the decision making is delayed because there is more due diligence that happens. Like more people are getting involved in validating those decisions and to see whether they have made the right choice, both in terms of commercially as well as from a technology selection. So I don't think that has changed a lot.
When you speak to CTOs of companies and your clients, where is the immediate spending coming in? In which area? Are they looking at medium to long term perspective, or they immediately looking at the current scenario and tiding over the uncertainty?
All of them, right? See, we spoke so much about uncertainty, and yesterday I called out, like there are a lot of programs in the cost optimization space as well as in the growth and transformation. And typically a CIO or a CTO would want to kickstart the cost optimization programs immediately, because they give him or her the benefits. So such programs, so if you broadly look at what are the kind of programs they do, like one set of programs are around operating model transformation. You have vendor consolidation programs. You have programs around cloud modernization. There is so much of talk about generative AI, but for generative AI to be leveraged well, you need to have a good data platform. So there are programs around data modernization, application modernization, a whole suite of programs. So it's not, there's no dearth of opportunities in the market.
You've been on the ground for multi-decades and you've been interacting with clients. This uncertainty which is coming and plaguing the Indian IT industry, how do you compare that with what we saw during the great financial crisis? Was that a short term, and this is a little long and elongated one, which is where people are not trying to get their heads around it?
See, if you look just immediately after the crisis, like What at that time the problem was nothing was happening for almost couple of years, maybe one and a half year. I would probably place it in the same league. I won't say it's more worry than what happened at that time.
My final question to you is about generative AI. You've done a couple of deployments in there. Give me a sense of how organizations are looking at it, how they are trying to bring in productivity within using generative AI. You've done a couple of proof of concept, and now you're deploying quite a few of them. So which areas are they putting in this generative AI?
Yeah, so there are two other, I was explaining in yesterday's meeting also. Broadly, we categorize them as in three buckets. One is the assist bucket, which is essentially you have the ability to summarize all the information from a lot of unstructured data sources and summarize it and ability to respond questions. Okay, that's the lowest hanging fruit. So where you see programs like contact center, customer call center kind of applications, or help desk, where you pose a question for which the agent would be able to get the answer quickly looking at multiple data sources and respond. That's the lowest hanging fruit, requires very limited organizational readiness. Then you move into what we call a augment, where you augment a human being. It could be entire programmer, like help them create a co-pilot for them in creating or developing new software, or it could be in terms of a wealth advisor advising his or her client. As they are talking to the wealth advisor, the co-pilot can come and say that how you consider or why don't you recommend these options. But still human in the loop is assist one, augment only, but providing the information. The next stage could be transformation, where new products and services could be thought of. So similar, as the degree of complexity increases, you would also see the earliest ones to adopt would be in the assist space, and then there is the augment, and then the transform comes. And so we see it in the same progression. Many of the early stage POCs are in the assist. Some they are trying out in the augment. I won't say that much happening in the transform, but for that the technology has to be proven in the assist and augment before people embark on something big on transformation.
Krithi, my final question to you is on TCV part of it. You've been able to get $8.1 billion. Give us a color of how much was new orders and how much was repeat orders?
We've not been splitting that, but it has not seen a significant change from the previous quarter. As a proportion, it has remained the same.
It was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you.
Thank you.
Take care. Bye.